If you have the S&P teetering on the end of its bull market, almost in a bear market here, do you want to be buying that dip? Joining us now is John Stoltzfus of Oppenheimer. John, you're a chief investment strategist. You have to have an outlook for 2019. Are we going to go into a bear market? What does that mean for your outlook?
Well, I think since March 9th of 2009, it's really been kind of a bad call to say that the bull market is about to die. And as you know, I've been a long-term bull market fan here for many years on both a top-down as well as a bottoms-up perception that things are getting better. When we look at it right now, the real problem the market is facing is algorithmic trading that's gotten out of hand. If you look at the front page of the Wall Street Journal, I think it's a worthwhile comment to read about the impact of technology on trading. If you listen to Leon Cooperman, if you listen to Stanley Druckenmiller, it's similarly real concerns that are being expressed by long-time people in the markets about what's going on as a result of that. So what we've got to say, we think it's a horrible time to sell. The old adage is buy low, sell high.
Right.
And for long-term investors, 3 to 5 years out, and long-term used to be 7 to 10. I've been in the business for 35 years. But if you consider yourself long-term at 3, 5, or 7, probably a big mistake to sell right now.
What's also interesting is that if you take a look at, say, the S&P where we are now, and then even the bullish and most bearish forecasts for the S&P for next year, there's still upside. There's still like 10% upside. You can see that really spliced out in a chart that shows the divergence of the two. Does that mean that no matter where we go, it's up from here when we stop the selling?
Well, we would have to say historically, history would tell us that indeed, when the selling stops, we will likely go up.
I know it sounds so obvious, but yes,
the reality is, fundamentals are not bad, and one is reluctant to say fundamentals aren't bad and say the economy is good, because one thinks one is being political, and that's not the case at all. As you know, I'm politically agnostic as a strategist. So I really, if anything, I think it's rather regrettable that the president has to be pitching the market. That's his business, but I'm shaking my head. But the reality is the economy has shown remarkable resilience throughout. For a long period now, it has been improving significantly. There are serious issues at hand. There's the trade war with China. You've got a new leadership at the Fed, still new after almost a year now with Jerome Powell. The recognition is it takes the market a long time to even become somewhat comfortable with a new Fed chair. And on top of that, you've had plunging oil prices. It looks more to us like the second half of 2015 into the first 7 weeks of 2016 than it does like 2008 or anything like that.